Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we're here to talk about the stock market. I want to give you three possibilities, three scenarios that we could see play out that could cost us a lot of money between now and the election, and possibly a week or two after the election, depending on how things play out. Now, today we lost about 623 points in the market, which is right around 2%, which is significant, but is not the end all be all. I want to kind of go in and describe what's going on and what are the three big hurdles that we need to be aware of and give you one reason why it may not be the biggest deal in the world, maybe even two reasons. So the first, why did the market drop? Number one, it is expected that we are not going to get the stimulus package. And we've talked about this before. You can go back about a week, maybe 2 weeks, and I discussed why the hope of the stimulus was what was driving the market. We had saw some pretty big days that we had not seen in several months because people hoped that the stimulus was going to get passed. And then there was a tweet that said from the president that it's not going to get passed, and it was back on and off, on and off, on and off. That's what had been helping boost the market. Now we've got somewhat confirmation that it's not going to happen at least before the election. So that's number one. We may not get a stimulus before the election. Number two, you've got the election itself. And we've already done a video about what I see happening depending on who's getting in office. But I'll say generally, at least right now, it's not really going to make that big a difference because there are equal concerns on each side as to why the market could go down. One could say, well, the theory is, well, if a Democrat, any Democrat, but especially if a Joe Biden gets in, he'll raise corporate taxes, that's less profit. Therefore, these companies won't make as much money. Therefore, the market is going to go down. Now, that theory is relatively flimsy for a lot of reasons in which we can get to in a separate video. But one reason why we know this is because we have data that shows Democrat, Republican, the market tends to go up either way over time. Now, what happens the week of the election, the day of the election, or the day after, that's where the big contention point is. So it's more of a short-term guess or a short-term assumption, not necessarily a long-term outlook. So that's number one. If Biden gets in, that is the expectation. That I don't think that's necessarily a bad thing. Again, it really goes down to economic theory and what we would expect to happen. And even if that were the case, it doesn't mean it's going to happen because you still have the Senate and the House still need to agree and get those things passed, regardless of who the president is. So it's still, even so, and it's still overreaction because so what? Anybody has a bunch of plans, but until it is passed, until it's written, ain't nothing gonna happen. So that's number one. But on the opposite ends, one would say, well, if the current president is reelected, well, one, that still causes some economic instability. One being any tweet can sink the market. We just saw this a few weeks ago. Trade wars that were hurting a lot of our tech companies such as Intel, Micron, AMD, all those were hurt when that thing was huge about a year, maybe a year and a half ago. The entire coronavirus mishandling. If the coronavirus continues as it has, and we're seeing record numbers now, that could also be an issue that continues to sink the market, but also hurt regular people like me and you who may not be able to go back into the workforce in the way we wanted to. I can't go back to the movies. I'm very sad about that. But all types of ramifications if the current administration stays. So there are, on both sides, there are reasons for investors to be pessimistic. And I think investors, you can be pessimistic or optimistic either way. So I don't think you want to really try and make some significant moves based on what you think may happen next week. Because again, I can also make a positive case for both and could sway you in saying that this person is going to be better for your wallet than the other. But in actuality, we don't know. And the market is going to react wildly, might I add, in either direction, regardless of who is going to be in office. So again, I wouldn't be overly concerned about what's going to happen to Monday, Tuesday, or Wednesday, or even all the way through Friday, because it may not matter as much in the long term. Then you've got the last thing, the last reason why the market can continue to dip, and also we saw this today, is the fact that coronavirus is still here, which we've been covered and talked about, that has not changed. And now it's flu season, now it's getting colder, and now viruses tend to spread a little bit more around this time of year. I'm not a health expert as to why they tend to spread around this time of year, but we do know this for a fact that the flu, pneumonia, stuff like that starts to float around right around now, right around the holidays when people are together. And since people don't understand how this virus works in terms of like wearing basic masks, washing your hands, doing all the basic stuff you should have been doing this entire time, we are seeing record numbers now. And with the election coming up, you're going to see millions of people vote in person. That is another, I don't know, super spreader event that could keep this thing going out, and it's going to continue to hurt companies like Disney, like the travel industry, like hotels, and it's not looking like it's going to get any better anytime soon. Again, this is going to still weigh on the market. Regardless of who becomes president, this could still be an issue and may continue to be an issue until a cure is found and we get enough testing and things start to calm down, which at this rate, we don't know how long that's going to be. Again, regardless of the election, regardless of the stimulus, you still got to deal with the coronavirus. And that may be the one thing that continues to at least weigh on the market. We saw a period of time where it was here and the market still went up, but every now and then it starts to remind itself, oh yeah, that's still out there. And the market reacts to that. So those are the three things. Now, the good news is over the long term, the market tends to do well, regardless of who the president is. The stimulus is important, but it's not the biggest driver, won't be a biggest driver at the election, in my view. So let's say the market falls. Let's say things are terrible. If they're not, perfect for us, right? But let's just expect it now. Like I've been saying, expect something stupid to happen. Expect lawsuits, expect chaos. And if it doesn't happen, that's great. But if it does, you are more prepared and you're not going to react. Your emotions are going to be stable. So let's expect and say that things aren't going to go well for the market wise. Hopefully society is still intact. But for the market, let's just say that things don't go the way you expected. It may not be the worst case scenario in the world. Number one, if you're a long-term investor, things could go down just like they did for Apple and it kind of came back up just like they did for Tesla back in March. Could be an opportunity to continue to buy and just stay the course. But also you still got Black Friday. And for some companies, the ones we talked about, perhaps a Lululemon, maybe a Walmart, an Amazon, perhaps, not so much Dollar General and Kroger, but those are still very good in my estimation, but they're really on place for Black Friday. But for those three that I just mentioned, you could, if things don't go well, you could continue to buy, let's say right after the election, if things don't go well this week, next week, what have you, get in now. And then Black Friday, December, end of the year, you may get a boost from that. Maybe. We'll see how things play out. But as I've always said, I'm staying consistent. I'm continuously buying every Friday, every other Friday, whatever day I get paid, and staying the course. And this is going to be a time where you will be tested to stay that course because things are going to be wild. You're going to see headlines, you're going to see tweets, you're going to see all types of stuff. Be ready for it and stay firm in whatever your strategy is. You guys know what I invest in. You see it on public. You can go back and check all the videos. You guys know where I am, and that is not going to change. So wherever you are, you should likely do something very, very similar. If you have quality companies, if you have index funds, long-term investors, we're talking like 80, 90% of the time, you're talking 3 years, 4 years, 5 years, you are going to be okay. You don't want to overreact and what's going to happen in a day or in 2 days or in a week. And that's where people are going to lose money. So get your mind out of that. Don't focus on the next 2 weeks. It's going to be messy. Know what's going to happen. If you want to buy, continue to buy for quality, go ahead and do it. If you're an option trader, that's messy. That's something you want to be concerned about, but we're not talking about that. We're talking about long-term investing, more reliable, more consistent investing. All right, that is it for me. Sorry for posting this a little late, a bunch of stuff going on, but we're trying to do that. Also, the book is written. We're going to go through the editing process. You're going to hear a lot more about that the end of the year and definitely into 2021. It'll be about the Tulsa Race Massacre and business. So how do we build Black businesses? How do we make sure that we have a good economic ecosystem? And what are the benefits of doing that? All right, so that is it for me. Make sure you hit the share button, and I'll talk to you guys later.